Hello, everyone. My name is Courtney Pollock, and I'm the Customer Marketing Coordinator for SWK Technologies. I'd like to welcome you to our webinar, Compliance and Beyond, the Value of Lease Accounting Software, presented by LeaseQuery's Ben Belt. Before we get started, let's go over some housekeeping items. Everyone has been placed on mute to keep the background noise to a minimum. However, throughout the webinar, you can submit any questions you have. If you'd like to submit a question, look for the questions section in your GoToWebinar, and we'll answer all your questions at the end of the presentation. We're also recording this presentation, and it will be distributed tomorrow to all attendees, as well as those who registered but were unable to attend. And finally, we'd appreciate your participation in our polls throughout the webinar and our closing survey. With that said, we appreciate you taking time out of your busy day to attend this webinar. We're here to help you get the most out of your software solutions and find an easier way to run your business by providing you tools, support, software, and industry knowledge whenever you need it. Today, we're excited to have our close partner LeaseQuery with us to talk about the new compliance standards for lease assets and the functionalities their solution provides to set your business up for success. So whether you're here researching a new solution or you're just here to learn, we'd like to encourage you to get an expert opinion by asking any questions you have. And lastly, as a quick reminder, SWK is constantly sharing important updates and software tips and tricks on our social media channels. We encourage you to follow us on Twitter, LinkedIn, Facebook, and subscribe to our YouTube channel where we post our recorded webinars. With that said, I'm going to hand it over to Ben to get us started.
All right, thank you, Courtney. So for today, I'm going to kind of add in more context, of course, as we get through here, but let me first kind of lay the groundwork for why we're doing this presentation and why LeaseQuery and SWK feel like it's important for you all to tune in. So in just 4 brief sentences, the Financial Accounting Standards Board has released new guidance for proper GAAP accounting for leases under what is now called ASC 842. Every private company in the United States is going to have additional compliance requirements and challenges for really their first fiscal year starting after December 15th of 2021, and then for every fiscal year after that. So for most companies, that means fiscal 2022, which is either being audited or reviewed right now or will be in a few months, is going to be under a lot of additional audit scrutiny, which should basically be expected anytime that new accounting standards are introduced. But in this case in particular, if companies use software to comply with ASC 842, then implementation will be probably 2 standard deviations easier. And auditors, when it comes time for that, will spend about 90% of their time on and effort on software input and looking at what you guys actually placed into a tool. But if you guys use Excel for implementation, then the basic idea here is that that will come with both known and unknown challenges, and auditors have to comb through input, throughput, and output, which is going to be a lot more expensive. So at the end of the day, what we're trying to do here is just describe to you guys what is coming down the pike with lease accounting and the new standards and why software might be a better choice than trying to figure it out on your own. So with that context in mind, a little bit about me. My name is Ben Belk. I am a CPA and lease accounting consultant here at LeaseQuery. I have about 3 years of public accounting audit experience at Deloitte, where I did my fair share of ASC 842 type work. Actually helped a couple of the larger public companies implement back when it was first being adopted, and then did some of the audit work for them as well. So I'll kind of throw in some of that experience there from the role before this one that I had. And then I've been part of the LeaseQuery team for about 2.25 years at this point. And in that time, I've helped around 400 clients actually use our tool to make the transition into ASC 842. So all that to say, I have a pretty good understanding of what it would take to get you guys there. One thing that I'll kind of reiterate here that Courtney already mentioned as well is that if you guys do have questions throughout the presentation, we're going to ask a couple of you as well with polling questions that come up just so that I can better gauge who you guys are and what you're interested in. But if there's stuff that I bring up that you would like to know, whether it's technical or software, this or that, or whatever else in the context of leases and lease accounting, just go ahead and throw those in the chat and then we'll get to them at the end. So now we can go on to the agenda. So first we're going to go through who LeaseQuery is and some of the compliance standards, just a little bit about us and more information on what I introduced in the title slide. And then we're going to go into compliance outcomes and consider one really common negative thing that happens without software, and then a couple of testimonials about good things that will happen if you choose to use software instead. Then we'll get into Excel versus software functionality. I think you guys are going to know in general what to expect here, but I still hope to leave you with something helpful that you may not have considered before. And then last, we'll talk about employee burnout and retention, just to go through some recent and kind of alarming industry trends that we see, which are driving more businesses to run with software whenever possible. Last, we'll wrap it up with LeaseQuery specific things and go through our 2 main offerings that I think SWK clients and customers, based on what I know about you guys, would typically want to utilize, so that folks who want to hear more at the end just know what to ask us about. So that is today's lay of the land. So first we'll get into LeaseQuery itself. LeaseQuery is fundamentally a lease accounting software designed to provide that everything that any company would need for any lease item. Now, our bread and butter is compliance with the new leasing standards, and our solution was built by accountants with this in mind. But as we'll go through today, there's also a lot of administrative functions that you could benefit from using a tool like this for. You could do like critical date alerts and hold on to your documents in the tool and stuff like that. So we're going to mostly do this in the context of accounting and how financial executives are going to benefit from it, but we'll also think about the rest of the organization as well. So currently we work with a little bit over 4,000 customers, and we have kept nearly every one of them. Our retention rate is 99% as well, but we're most proud of our average rating and probably owe that rating to the many technical experts that we have who work here full time. We have about 41 right now. If you go to leasequery.com/expertise, you'll be able to see those people. And then in general, accountants are pretty hard to please. So a 4.8 out of 5 rating is probably what we're most proud of. That'll come from users that have actually been in the tool for a couple of years, and that would include auditors as well, who are even more difficult to kind of satisfy. So we're pretty proud of that. And if you guys want a little bit more information on us, I think these days it's useful to consider what people who have already bought something actually think of that thing. So if you want to go look at those user reviews and those ratings, you can go to g2.com and just type in like lease accounting software or something like that, and then you'll get a pretty good view of the competitive landscape and where we fit in. So with that, we're going to fire up the first polling question, which obviously you guys are not required to answer these, but I would appreciate it just to make sure that I can tell you something that is going to be relevant for everyone. So this is, how would you describe your understanding of accounting compliance standards? And Courtney, once you fire that up, the options should be, this is the first time that I'm hearing about ASC 842. I understand the basic principles. I am reasonably certain about how this is going to impact my business, or I could lead this presentation. So I'll take a,
Thank you.
Go ahead, Courtney.
No, I was just going to say thanks to everyone who's responding to the poll so far. It's we've got some extreme differences here.
Good, that'll make it fun.
And most people have voted, so we're going to close the poll out in just a second and show those results on screen. Okay, so Ben, I don't know if you can see the results with everyone else, but we have about 71% who understand the basic principles, but another 30% is reasonably certain. So it seems like everyone in this audience has a little bit of understanding with what's going on here with these new standards.
Yep, good. I wasn't able to see the poll, so I may lean on you to share the next couple with me as well, just for kicks, but that is basically what I think I would have expected, and I think it's good that you guys are kind of in the understanding phase and that none of this is brand new to you, so I don't have to explain everything from scratch here as we go through. That's good. So now that we've kind of considered the context, we want to know a little bit more, what are the new rule sets, who do they affect, and then later into the presentation, why should you care? So here, this slide is mostly going to be looking and a lot of talking, so there's not a ton on it, obviously, but I think to understand why compliance will be difficult without software, it's kind of useful to consider the basic ASC 842 timeline from the regulatory perspective and get a feel for their goals and pressures and the actual mechanics of what the FASB was trying to achieve. So up here we have really all three of the standards: IFRS 16, which affects all international companies that have leases; GASB 87, which affects all state and local governments, and technically the federal government as well, although they have a different name for their standard in the US. And then ASC 842, which is what we're going to put most of our effort into today, which affects all of the US public and private entities. And just for context, again, there's about 6,000 public companies in the US and about 6 million private companies. So this is, again, more of a big impact on the private companies for the most part, and the public companies have already gotten it out of the way. So for today, again, going to focus primarily on 842 under the FASB, and their story from conception to issuance of a standards update does a good job of illustrating why this might be difficult for private companies to understand and actually implement on their own. So in relative brevity, the FASB began working on the new lease accounting standards at about July of 2006 in response to concerns over the comparability and transparency of different financial statements, and the fact that big companies can hide future material lease obligations down in the footnotes just by structuring a contract in a certain way, which would be an operating lease. So Delta Airlines is a great example of this, which I will come back to. But to keep going with that kind of timeline narrative first, the FASB had issued a preliminary views discussion paper in March of 2009. So between 2006 and 2009 for them to publish their first kind of public exposure draft of this. Between 2009 and 2010, it took 4 years basically to bring everything together and come up with relevant examples and present a start of what they would like to change. And then we had a couple of years to gather feedback and for companies to comment on that and share what they thought. And then they issued a revised exposure draft in May of 2013. And then 3 years again after that, Topic 842 was issued in February of 2016 and has since been amended by 12 subsequent accounting standards updates that are all under that 842 umbrella. Some of those were like deferrals of the effective dates, as we know happened with COVID a couple of times, which is why we're doing this now and not 2 years ago. But as we know, public companies had this rule go into effect for their first fiscal year after 2018, and private companies now have to comply in their first fiscal year after 2021. So that means for 1231 year-end companies, which is probably most of you guys, all of fiscal 2022, which is obviously the last calendar year, is going to have to be reported under the new standard. So companies with year ends other than 1231 will have a little bit more time, but everyone is going to be required to figure it out by the end of 2023. So the takeaway here is that considering it took nearly 10 years for the FASB to develop and issue ASC 842, we should expect for the new standards to have pretty significant impacts on lease accounting, and that implementation is going to present some challenges. So kind of with that in mind, I think it'd be helpful to consider an example company, which could be thought of as a catalyst for this update. We like to use Delta Airlines because they're headquartered out of Atlanta, and that's where LeaseQuery is headquartered out of as well. In short, we don't have to get super into the weeds on this, but basically Delta leases all of their planes. So obviously the way that they run their business is by actually flying people around, and we could get into a whole kind of conspiracy theory about the airline points being more like a bank and that they really behave more like a bank than an actual airline logistics transportation company. But if you're just someone that's trying to read and use the 10K to understand what's going on with somebody's business and you want to decide if Delta is a reasonable candidate for part of your retirement account, then theoretically you're going to look at the balance sheet and the income statement and the cash flow statement, et cetera. And if you were to do that, you would have no idea that over the next 5 years, Delta owes over $100 billion on lease payments for the planes that they use to actually operate their business. So they have all of these leases for, frankly, things that behave like assets, just like normal fixed assets, which can basically be hidden away on what was actually page 57 of their 10K report, where the financial statements themselves, which are supposed to communicate all of the relevant information, are way above that on like page 10 or 11 or 12 or places like that. So if you're a normal financial statement user just trying to make a quick decision, you're not going to likely read 40 pages of content just to get down to something that is that significant. So because of the fact that that stuff was down in the footnotes instead of on the balance sheet, the kind of fundamental way to think about this is that what we're trying to do is create kind of a total asset picture for companies, which is already fixed assets. And now it's also going to include leased assets as well, because they behave exactly the same from an operational perspective. So what was previously just cash and expense every time that you made a payment for a real estate location or a vehicle that you guys lease is now going to be capitalized with an asset and a corresponding liability onto the balance sheet. The income statement is going to be 99% the same, but we have to represent those future obligations at their present value right now because they behave like normal assets. So now we can get a little bit more into the contract level, a little bit deeper down and more precise to help folks understand what might actually be in scope for this update. A question here would be just, what is a lease? So a lease is a contract or part of a contract that conveys the right to control the use of identified PPE or some tangible asset for a period of time in exchange for consideration. So the two key elements here are that there is an identified tangible asset and that you do have the right to control that asset. But I think it's useful to point out in that definition as well that part of a contract, it is a contract or part of a contract. So like embedded leases, for example, as well, can also be part of this. If you guys have like a service level agreement with some kind of software like AWS type vendor, for example, if they identify a specific server that you guys actually have the right to use, that's like your company's data item, then that could be an embedded lease that has to be considered in the context of 842 as well, because it's an asset. So typically when we say, oh, the accounting standards update is changing the way that businesses account for leases, most people just think, okay, so my office locations and maybe a few cars, but it's really any tangible asset which is not inventory or a fixed asset that has to be considered. So in addition to the two obvious ones, we have seen stuff like office equipment, photocopiers, printers, scanners, industrial machinery, cranes, forklifts, excavators, aircraft of all types, planes we gave the example of, but also like helicopters, IT hardware, computer servers, networking equipment, embedded leases could show up there, medical equipment, smaller construction equipment, musical instruments, restaurant stuff, farm equipment, fitness stuff, retail fixtures, things like shelvings, display, signage, all the stuff that normal people that manage the inventory for a really retail heavy business, like the scanners that are used to do their counts, for example, AV equipment, telecom equipment. A lot of people lease out space for other people's things, like radio transmitters, cell towers, ATMs, mall kiosks. There's a lot of scientific equipment that some people lease because things like microscopes are extremely expensive, especially for like a university, for example. And then there's event equipment, cleaning equipment. Basically, it makes a lot more sense in many cases in the real world to lease instead of buy. And all of that stuff has to be considered as to whether it's going to be in scope for 842 or not. So it's a little bit more pervasive than most people expect. Now, from here, hopefully that drummed up a question or two. So we're going to take a small break and launch the second polling question. This is just a way for us to try to gauge what part that you guys think is going to be the most challenging. So the options are, we don't know yet, which hopefully no one's going to pick because nobody said that they had never heard of 842 before, and then data gathering and scoping, implementation, or the audit.
Great, and over half the audience has responded, so thank you everyone, and we really appreciate the participation. Once again, we're sort of divided along the same lines, Ben.
Gotcha.
And I think most people have responded, so we're going to close this one out in just a second. So if you haven't selected your answer yet. So Ben, it looks like we're almost divided half and half. So about 43% think that the most difficult part is the data gathering and the scope. And then the other 57% is worried about implementation.
Okay, gotcha. So this, I'm glad that those were the results that we were getting at here, because I think that is what most people would think. And there is some kind of accounting generic answer to this, which is that it's going to depend on the nature of your business, et cetera, which part is going to take the most time. But the thing that's being overlooked most of the time is that the audit is really going to be the hardest thing, because I mean, obviously you guys have to do the work beforehand, but that's going to involve a lot of communication and collaboration with the auditors as well, or with vendors like us, to understand what you have to actually do to gather the data, scope, and implement. But the audit is really the part that people end up struggling with for many reasons that we're going to kind of very clearly point out as we go through. But at the end of the day, whenever you're adopting a new accounting standards update, the auditors are just hearing bells ring in their heads, because they know that they're going to be able to charge a lot more fees to help people with this, because it's their job to understand what's going on. And then just to use an example of my public company that I audited back in the day for this, we had about a $3 million fixed audit fee, and we increased that by 30% the year that 842 was implemented, just because of that one standard. So, you can imagine that the most difficult part, perhaps, I mean, the auditors are doing the work, right? So maybe it's hard for them and not as hard for you, but you guys have to prove out everything that you did and the documentation of all the process, et cetera. And, again, back to the main point today is that software is going to hopefully make that a little bit easier. So just keep in mind that the audit is going to have some difficulty too. And as we go through here, there's a couple of different, I think when we introduced this, we said that we'll consider one common negative thing that happens to companies with leases and without software, and then a couple testimonials about good things that happen to companies that have leases and software. So we're just going to do exactly that. So this is an example of a compliance nightmare, needlessly increasing rent by $49,000. In the example here, the owner of a franchise restaurant group, which was a client of ours, began escalating their rent payments 6 months too soon, resulting in overpayments of $49,000. And just to be clear, this error happened before they became a client of ours. So just to kind of zoom back and take an analogy here, the only time that I have ever had to fight someone for the right to be the bank in Monopoly so that no one else cheats is if I am playing Monopoly with someone else who also used to be an auditor, which luckily, has never happened. But as we know from playing Monopoly, especially if you choose to be the bank, is that sometimes people, which could be banks or other companies or whatever, make errors which are in your favor, and you really do not have any legal obligation to tell them. So in fact, I bet you have a GL account code for this exact thing. If you guys have a way to book errors in your favor, then so do your landlords. And if I were them, I would not tell you about the extra cash that I may or may not be receiving in error. So what happened here, right? So the entity took possession of several leases in June, noting that the term was from January to December with annual escalations, but the agreement also stated that if the lease starts on a day other than January 1st, then the first payment would be in effect from commencement to the end of the next calendar year, which is an additional 6 months. So Excel, obviously this is a little bit user error, right? But that's kind of the point, is that Excel did not capture the payment schedule nuances, and the company increased their payments 6 months early. And so they made this huge overpayment. And frankly, we never found out if they got it back or whatever the case is. But the point is, this is something that creates additional challenges and shouldn't have to be dealt with if there's no need to manually track this stuff. So LeaseQuery in particular has a few specific functions that are actually designed just to prevent this. The separation of duties controls for data input, documentation of the rent that you're supposed to pay, the ability to adapt to any payment structure, and pre-built AP reports, which could be used to actually reconcile whatever payments that accounts payable made with whatever they were actually contractually obligated to have made. So this is something that could very easily be avoided with software. And now we'll go through a couple of examples of what happens when it goes well. So here, the overarching theme again around today's presentation is that we are sensitive to the fact that ASC 842 and other new standards create what is fundamentally a compliance problem. So we know that even if software can help companies to organize data, organize documents, automate the journal entries, reduce the time it takes to close the books, et cetera, the real value proposition is that when the auditors come in to do their work, they have everything that they need to get through the 842 part of the audit without any surprises and without any excessive PBC requirements for the accountants that you guys, that are on your team. So in this case, we have a couple of pretty high level kind of generic examples, which were basically reduce risk and free up your resources so that they could focus on the rest of the business. So you're going to remain compliant regardless of how regulations change for lease accounting. Our fundamental contractual obligation is to keep you compliant with whatever standard that you're underneath the umbrella of. So you'll have access to all that stuff. Lease accounting automation that saves time and avoids errors, everything from the initial draft of a contract that legal is working through to the final version of it that has to ultimately be booked can live in the tool. And you can kind of follow that timeline and narrative throughout. Your solution could integrate, your solution meaning LeaseQuery, could integrate with whatever ERP that you guys have. I know that there's a lot of Sage 100 users, Sage Fixed Assets, and some other folks that might be on Acumatica or some of the other kind of common SWK ERPs. We can integrate with all of those. So it's really easy to make sure that whatever journal entry comes out doesn't have to be reformatted such that it would fit into your ERP. So that's a little bit easier in that regard as well. And then we can also save your team, countless hours, just because it really is difficult to quantify how much time is saved. That goes back to the it depends kind of accounting answer. But at the end of the day, your monthly close process and your annual close process as it relates to leases would literally be reduced to a couple of clicks. So last, we have a little quote here from one of our referenceable clients, which is that from somebody at Roof Mortgage, we have an individual who manages leases and lease negotiation build-outs, but that's not his core job function. Investing in a lease accounting software offered an opportunity to address this frustrating operational challenge and free up resource hours that could be better used elsewhere. So, that's a key part of it operationally. And then again, fundamentally, we know that this is kind of a compliance problem that we're solving. So with that, we will fire up polling question number 3. What is the biggest challenge of using Excel for compliance with your organization? So there's obviously a couple of really key risk areas that Excel is going to have that software would not, and I'm just curious how you guys think about that. So we have data integrity, version control or change management, calculations and formulas, the actual reporting and disclosures that come from all that stuff, or manual integration and workflows to get the Excel data out and into the ERP.
Thank you to everyone who's responded so far. We're going to leave the poll open for just a few more seconds. And last call for getting your response in. So Ben, it looks like on this one, we've got 3 out of 5 responses chosen. So the lowest group was 17% feel that the biggest challenge is the data integration with using Excel. About half of the audience thinks reporting and disclosures is the biggest challenge. And then the other 33% it says manual integration and workflows.
Gotcha. Okay, so I think I agree with you guys, right? And this one is going to depend as well on what you have going on, but the short answer is that those are all right. And I'm just kind of interested in which ones are most important to you all. The one that I would maybe add to that, which I'll describe a little bit more later, is option B, the version control and change management. again, from an audit perspective, with this as a compliance problem, changing things is one of the hardest things to properly substantiate when you're going through the audit. So we'll talk about that too a little bit more, but for now, we can get into the basics of Excel versus software functionality. Again, I think you guys know what to expect here, but I still hope to leave you with something that you might not have thought about before. So what we'll start with is a comparison of LeaseQuery's two main products versus Excel in the context of lease accounting. This is the part that I do not expect to be a surprise, but again, could help to introduce our offerings before we get into a little bit more detail later. So a couple of basic things that you're going to have to do if you're going to be 842 compliant. You have to run journal entries and amortization tables. With our tools, that's going to be automatic. You just click, I want this period of time and I want to include all the leases or some part of those, and then you hit run and it goes. But with Excel, you have amortization tables that are all over the place in different slides, and there's different versions of them, and some may or may not have been approved, and the calculations might be wrong, and you have to move all of that into the ERP. Reporting with the click of a button is kind of the same thing. That's perhaps a little bit redundant there, but it goes out of the scope of just journal entries and into stuff that would be hard to parse out from an Excel amortization table, like what leases are going to expire in the next 12 months, or what amount of rent are we going to pay over the next 2 fiscal years. Whatever kind of question that you have like that can be posed to the lease accounting software and very quickly answered with a custom report. Compliant calculations, obviously it is possible to do this in Excel, but LeaseGuru and LeaseQuery already have them ready to go. So that should be pretty self-explanatory there. And then Excel is most of the time not in the cloud, and you get kind of lost in different versions of files that are passed around and touched by multiple people. They have to be manually reviewed, et cetera, during month-end close time, whereas with LeaseGuru and LeaseQuery, we have a very easy, secure cloud environment that multiple people could be logged into at one time, and there's not going to be any overlap or redundancy from the teams that are using the data in there. Internal controls is a pretty easy one as well. LeaseQuery is going to have this, and LeaseGuru is not, because LeaseQuery is our kind of flagship product, and LeaseGuru, frankly, is a starting place for people that aren't sure if they need the full thing, but definitely need the basic compliance functionality so that they don't have to do it in Excel. And in this case, we're really just talking about the separation of duties control. LeaseGuru is designed to be used by a smaller team. So if you enter data, you can also approve that data, but you're kind of taking on that entry and approval risk. Whereas with LeaseQuery, if you have at least 2 people that are going to be working on this stuff, one can enter it and another can approve it, which would then be saved in an audit trail, which is the next point, so that we can actually understand and share with the auditors who did what and when, who approved it, and just make it easier to track along there. So the audit trail is a key feature as well that, again, reduces the amount of time that they have to take to poke through all that stuff. And then the document repository is one I've alluded to already, where Excel is not going to have anywhere for you to upload files except maybe a screenshot of some kind of picky lease clause that affects the rent payment. Just is very messy, right? LeaseGuru does not have document storage capabilities, but LeaseQuery does. We offer unlimited document storage for whatever that you would like to associate with every lease contract there. And there's no file type restrictions or limit to the number of files that you could store. So it's whatever you would like. So that's the key difference here between what you're going to get from a compliance perspective. You can just think about every one of these lines as going to make the audit more expensive if it has an X. So next, we're going to get into why organizations turn to software for lease accounting. I would say that in general, there are these 8 main channels of accounting and reporting which software actually improves. So I'm going to kind of introduce each of them and take a little bit more time on the ones that I feel are a little bit more important. So automatic journal entries. This obviously is labor intensive in the real world, and then it's much easier to do in software. We've already been through that a couple of times, but it's a big benefit, which is why we put it first. Reporting capabilities. We can kind of parse this out into pre-built versus ad hoc or custom reporting. And with software, of course, we're going to have pre-built all of the stuff that you need for compliance and all the stuff that is commonly asked for, like an AP forecast report or a lease history report, et cetera. And again, it's harder to manually build and then automate stuff like that with Excel. Compliant calculations, again, this is our only contractual obligation. I think it's important to consider just how much more risky it is to try to do this big of a change in Excel, because under ASC 840, journal entries were really just cash and expense. AP would get the invoice and then book the expense to match that cash. But now we have to straight line the expense, which is harder if the rent escalates over the contract term. And then in addition to that, now straight lined expense, which means that AP is not going to be able to book that journal entry. We have to add a right of use asset and its net reduction over time. We have to add a total liability and its net reduction over time, a short-term liability, a long-term liability into every journal entry. So this is not super intuitive, but software obviously has it figured out just after entering the base rent details. The next one is pretty self-explanatory as well, a secure cloud. Just a question to kind of consider here is, where are all of your leases right now? And if you don't know that for sure, then it could be useful to consider that even that one benefit alone might be worth investing in software, just so that everybody that uses the lease data has it in the same spot and can read it whenever they would like. So again, you can control kind of change management stuff if there's people that are not privy to changing accounting information, but still want to be able to view the lease document. Next one is internal controls. Again, most people use spreadsheets to kind of sign off and prepare and review functions which have to be manually tracked and just create more audit work. Whereas with LeaseQuery, everything that anyone changes ever is automatically saved and then has to be approved, which is also automatically saved. So it makes it super easy for folks to go through and figure out who did what and when, and that kind of ties internal controls and the audit trail together. And then document repository, again, we've been through this too, but at the end of the day, you have unlimited document storage. You could put whatever you like into the software, even if it does not have to do with lease accounting. I think that's important to consider as well, is that if someone's digging for a cherry on top kind of value proposition benefit here, if there are other contracts that you struggle to maintain date notifications for or want some extra reporting outside of the scope of ASC 842 and leases, we can also put those types of contracts in here just so that you could still get some of the administrative functionality out of the tool for those as well. And then last is critical date notifications again. So self-explanatory, but again, very important. All you have to do is enter the base rent details into the tool, and then you get emails before rent increases and you get emails before upcoming renewals, so that no one ever has to remember to check a spreadsheet or a PDF to stay current on these items. So to kind of summarize the highlights here, we can think back to the main idea from the auditor's perspective, which is that with software, which contains all of these features, all they're going to have to go through is the input, not the throughput, not the output, because of all the benefits listed here. So just from an operational perspective as well, to go further with it, LeaseQuery again offers unlimited user licenses. So all the teams who use the lease data can store all of their stuff in the same spot, and processes that involve multiple departments, which we'll show in a second, get a lot easier on the actual financial reporting team, which is who we're really trying to prioritize here. So that last slide was the reasons that organizations would turn to software for lease accounting, and this one is helpful to understand which departments are going to have to sync up and collaborate in a more robust way, much more frequently because of 842. So I'll discuss one or two changes in each area and then touch how software can help. So for legal teams, legal, as I'm sure we all know, gets typically roped into lease negotiations and puts a lot of time and effort into limiting liability and limiting unnecessary obligations for you guys as the lessee in lease contracts. So LeaseQuery has a space where the council could simply paste in lease clauses which are associated with each contract, and then in 2 seconds they could run a report that answers a question like, what are the snow removal rules at our 3 leased retail locations in the Northwest, so that businesses can continue as usual after a big storm without having to take time to go look up all that stuff. AP, we've touched on a couple of times. They kind of get the short end of the stick here because under 840, again, they just get an invoice and then make a payment and book a journal entry which matches the cash to that expense. But under 842, AP simply does not have enough information to make a full accrual ASC 842 journal entry because all that they know about is the cash. So companies will have to change the AP processes to incorporate clearing accounts and ensure that entries do not get booked twice and can be reconciled appropriately during close. Real estate is another important operational team to consider. Real estate teams usually have things pretty well figured out operationally, but often do not have software to help, which could just make it a little bit easier. So just like earlier, we mentioned kind of the document repository and storing contracts outside of the scope of leases, which could be a cherry on top benefit. There's another one for the real estate team, which is that LeaseQuery has all the basic admin functions that a team might need, and their use of a compliance forward tool like LeaseQuery is, again, just cherry on top value for companies that might benefit from running real estate management teams a little bit leaner. IT's involvement is not materially going to change, but it's useful to note that they will be involved during procurement, although this is very low risk because LeaseQuery is cloud-based, and then they may want to understand and document any kind of process changes coming. Oftentimes, IT teams want to be managing users of whatever third-party software tools that a firm will buy, and so we can set that up to allow that as well if that's the way that your organization works. Accounting, we've been through this already, but if it helps, LeaseQuery's mission is to make accountants and financial executives' lives easier by simplifying the complex. So that's the biggest theme of today. Treasury as well, typically more future-focused and does a lot of modeling. With LeaseQuery, it would be super simple to come up with forecasts for lease expenses, figuring out what is going to expire soon, and really just have another tool to perform their job a little bit better. So that kind of wraps up the basic value proposition about the difference between Excel and LeaseQuery in particular. So now let's look at a few industry trends that we see which are driving businesses to run more with software pretty much whenever possible. So here, theme here is that burnout is a big concern in the US. I'm just going to read these one at a time because they make very different points. The first one kind of speaks for itself. 82.4% is the number here that we're going to focus on. Deloitte reported that 82.4% of hiring managers were struggling to basically fully place all of their open roles. So less than 20% of all of the hiring managers that are doing finance and accounting recruitment type functions really are missing roles that are simply not being filled. So again, what this is saying is that all the way down into like high school education, people are being pushed away from a skilled technical kind of white collar career like accounting and finance. And all the while on our end, for people that are actually working in industry right now, things are getting more complex. So that disconnect there is important to consider. The second one is a little bit more from an audit perspective. So roughly 40% of accounting and auditing jobs specifically were left unfulfilled or unfilled in the first 11 months of 2022. So it basically took a full year to get 60% full on new audit jobs, according to somebody that does studies on this type of stuff. So from an audit firm perspective, this means more work for the few employees that are already there, and the few employees that are already there continue to get more expensive all the while. So again, software is going to just help you save audit fees and lighten their load a little bit so that the auditors too can focus a little bit more on, frankly, other areas of their lives. And then the third one is kind of the biggest number and the most, I don't really know what to call it, but something perhaps scary, right? Which is that 300,000 US accountants and auditors have left their jobs in the past 2 years. That's, what is that, 0.1% of the US population has left audit. So I think it's worth considering. LeaseQuery actually wrote a blog specifically about this last point recently because it really is becoming a big deal and a big trend in the space. Wall Street Journal has written a few articles about it. There's a London-based newspaper as well. All of these people are reporting on how hard it is to recruit talent in the US for finance positions. So from personal experience, all the people who I thought were top talent at the audit firm that I worked for, basically just put in their 2 years of public accounting time and then left because it's a difficult job for most people that really the value proposition is not necessarily there. And for the few that think staying until partner kind of fits their personality, that there's really just not that many of those folks. So basically there's a ton of turnover. If you are thinking about your career and trying to kind of pull forward a little bit of the financial benefit of working in finance and accounting, you're probably not going to want to spend much time in audit. And that trend is making it more difficult for firms to do the amount of work that they have to when new standards are adopted. So all this ties back to having the right tech in place to help fill gaps on your teams and alleviate, finance teams with little to no bandwidth, like audit teams that are just going to have too much work to do. So one more general industry trend slides here. So we discussed the different reasons that organizations might turn to software and the different business areas that are going to be impacted. This slide kind of brings both of those together by looking at people, why people say that they buy software. So this doesn't per se just relate to leases in particular, but in general, why do people invest in technology instead of hiring more people? So the first one is that it's going to improve efficiency and save time. The second one is that it's going to optimize processes and improve the compliance. Those are kind of all the same thing. And then the fourth one here is cut costs. I think one thing that often gets overlooked, and it surprises me how many times I see this in the real world, but people will often hire an outside consultant or even a full-time employee for 6 months or a year or whatever to implement 842. And we all know in general what an experienced accountant hire is going to cost for that amount of time. Software is a tiny fraction of the cost of a person. So if we're trying to do the same type of stuff that we could do by hiring someone, but just cheaper, and then we also have these other benefits of many more teams being more efficient, saving time, in a better position, then it just kind of makes sense, right? The narrative is not a surprise. And then using technology to improve what type of processes generally. So expenses and AP, financial reporting, billing and AR, month-end close, lease accounting, all of these are related, right? But basically what we're looking at here is that roughly 80% of people have issues with these top 3 things that are all going to be directly impacted by ASC 842. So again, it looks like a lot of the people in the real world are also not too worried about the audit part of this, but I think that's perhaps a little bit in error because that's going to be one of the hard parts for sure, especially if you guys choose to do it on your own. And this just does a good job of kind of describing why people do what we're here to consider in a way that hopefully is not too much of a surprise. Now, I know we're not quite at an hour here, but we have just a little bit more to say about LeaseQuery in particular, and then we'll fire up one more polling question towards the end and kind of wrap it up, and I'll give you guys a little bit of time back. But now we're going to just consider the 2 LeaseQuery software solutions that we looked at earlier and actually understand which one would be a better fit for you guys. So just as a reminder, this is the last chance to get questions that you might have, even if they're very technical. I can answer those too into the chat because we only have a couple of minutes left. But again, we're going to ask one more question to you guys before we wrap it up too. So the two main software solutions that I think SWK clients that have kind of the fact pattern that you guys do are going to benefit from most that we offer are LeaseQuery and LeaseGuru. Frankly, LeaseQuery is like us with LeaseQuery, the product is like Apple is with the iPhone. Like we really put 99% of our R&D and our time and effort and expense and energy into making that product perfect. And then LeaseGuru is like the diet version of that that is useful in a pinch for people that really just don't need everything that this one has to offer. So LeaseQuery is going to get you fully compliant under any of the new accounting standards upcoming, some of which are not even technically leases, like GASB 96 is for software agreements, but we have functionality ready to go for that. You can put as much of whatever you would like in there, unlimited users, unlimited leases to be put into the tool, unlimited document storage once you get it in there, unlimited customer support requests after you become a client. We really don't cap stuff like that or nickel and dime you guys if you exceed whatever kind of usage that you expected. We can integrate with any ERP. It's native in NetSuite as well. If there happen to be any NetSuite users, we actually have a LeaseQuery product that lives in that ERP, but we still have a pretty good offering for some of the other ERP solutions as well, which is direct integration or some kind of custom journal entry export so that you can automate that part of the process too. And then again, auditors only will look at input. We have dedicated support team available by phone, email, office hours. We have a ton of support resources. And again, do not charge you guys to take advantage of those because the idea is that we know this is a compliance problem. We're a solution that was built by and for accountants. We actually increase our customer support hours around period and close times. And we know what you guys are up to and that you're going to need more help around then. So we have a ton of people, including 41 accountants or CPAs with technical lease experience to help out. And then obviously the reporting studio in LeaseQuery is a little bit more robust than Guru. The way to think about it is, again, that you can either run pre-built reports for whatever would be required or stuff that's really commonly asked for, like a forecast type report for AP. And then you can also custom build whatever ad hoc reporting that you would like to report on at all. So you could report, as long as you put in the input, right, you're going to be able to report on whatever that is. So even if you had a fleet of vehicles and you wanted to track who drove each car, we could build some kind of report that would be just landing in your inbox at the beginning of each month to get a quick picture at that. And you don't even have to log into the tool to be able to figure that out. With LeaseGuru in particular, it's again the same general idea, but just with a few more constraints. So we can only do ASC 842 or IFRS 16. We cannot dual report with LeaseGuru, but if you need to do 842 and IFRS 16 together, that is something that would push you into what we call LeaseQuery Advanced. But if it's one or the other, and again, not GASB, then we can do LeaseGuru. It can store up to 15 leases. So that's kind of a reasonable way to think about the cutoff point for leases in general. If you have more than 15, definitely get software. If you have less than 15, think about it. You can have 2 users and 1 audit user, so 3 total in Guru. But again, that's unlimited with LeaseQuery. You can, to an extent, automate journal entries, amortization, and disclosure reports. It works the same in the sense that you just input lease data and then you can get that stuff out, but you can't export it to Excel as easily or do custom reporting, et cetera. And with LeaseGuru in particular, if you have 2 or fewer leases, it's actually free. So feel free to go poke around and look at both of those. Go to leasequery.com/pricing for more information on either. But again, keep the questions coming to the extent that you guys have any. And now we'll go to polling question number 4. And then Courtney and I can wrap up after that. So just because I've been reading them so far, right? Are you interested in discussing your lease accounting needs further? The options are, we are already compliant, I have some questions, or I would like a demo.
And thank you for everyone who's answered so far. So we will close this poll out in just a second and then move on into Q&A and wrapping things up. And I'm going to close this poll down. So thank you for everyone who took a moment to answer.
Yeah, thanks, Courtney. So this is our last slide right here. So just to kind of wrap it up a little bit, I guess, Courtney, would you like to do Q&A first, or there's some questions you'd like to start with before we close?
Yeah, so we can move into Q&A now. So we are going to start our Q&A portion of the webinar. So please go ahead and insert any questions you have in the questions section of GoToWebinar or in the chat. Either works fine. And I'm going to go ahead and get started with some that we had come in throughout the presentation, Ben.
Okay, sounds good.
So our first question for today is how many leases does someone need to require software or to need software?
Yeah, that's a really good one. And there is some uncertainty with that too. Again, it always depends a little bit. If it helps, we have 5 or 6 clients that have only one lease in the tool and still pay for the full kind of enterprise version. And then we have some that have up to tens of thousands. So any size portfolio could fit depending on what kind of other challenges that you expect to go through during implementation and the audit, or just in general day-to-day management. But a very easy cutoff threshold would be 10. That's what I typically say.
Great. And our other question that we've had come in throughout the presentation was how does LeaseQuery integrate? So, and I would also add, with what systems does LeaseQuery integrate as well?
Gotcha. Yeah, so it depends a little bit on just the nature of the ERP that you guys use, but we can build some sort of thing that would behave like an integration for really any Sage product, any Acumatica product, and then some of the other large ERP players that you would have heard of before. Most of those are APIs. If you have a cloud-based system, then it's an API integration that we just turn on and we actually maintain ourselves. There's no marginal effort required in setting that up on the client end. And then, obviously in particular, we can, if you have like a Sage 100, for example, we know what kind of format that's going to want to accept for a journal entry. So we have pre-built secure file transfer templates that we can use to just, again, basically have you click a button in the tool that would behave like an integration and just appear within Sage.
Great. And I think we had those 2 questions come throughout. So unless, we have a last minute submission here at the end, I think that's going to be all for our Q&A today. Keeping it short and sweet.
Okay, cool. Well, happy to give you guys some time back. So I guess to kind of wrap it up and summarize, we appreciate your time today. LeaseQuery is ready whenever you guys are to help answer questions and point you in the right direction, which we hope could be working with us. If you do have any questions that we did not get to today, or maybe you haven't figured out quite how to ask it yet, we'll be happy to reach out after today's webinar with a response to that, if we received any of those last minute. And then if you would like a demonstration of the LeaseQuery tool, I will actually personally do that for you. We can meet for up to an hour, and there's no kind of fee with that, of course, to kind of help you through it. And if you have any guidance-based questions as well, we're not going to try to give you something that we don't think that you need, but if there's still some uncertainty here, then we're happy to meet. So if you're interested in that, contact either your SWK rep or myself directly through my email that's posted on the screen here. And again, just appreciate your time today. So hope you enjoy the rest of it. And then I'll turn it over to Courtney for any kind of final closing thoughts here.
Well, actually, we had a question come through right then. So I think we can go ahead and answer that one before we close it out.
Yeah, sure.
Are intercompany leases required to be reported, such as tower leases or building?
Gotcha. So short answer is yes. The caveat answer is that it would depend on what kind of external reporting requirements that you have. If it's just one consolidated kind of parent company picture financial statement, then usually no. But the FASB actually released an update about this recently, which is that people were having trouble from a implementation effort perspective, coming up with legally enforceable terms around those agreements. And this would be a case where you have like an umbrella corporation that has a couple of subsidiaries that post independent financials as well. So from the parent corporation's perspective, it's just money out of one pocket and into the other. But for the standalone financials that people could separately invest in or have separate stakeholders, they're going to want to know about what's going on in each of those cases. If somebody has an expense and somebody else has a fixed asset, then they want to understand that. And the short answer, again, is almost all of the time, yes. But recently, because it's difficult to kind of compile and implement those, the FASB has issued some guidance that says that you don't really have to have terms in writing per se with like a full legal lease agreement to scope that in for 842. So, from a software perspective, that doesn't really change anything. And of course, we can set up chart of accounts or whatever types of things so that you can, for example, publish a journal entry or a complete disclosures report for the whole company or for one parent or for a subsidiary or whatever. So all of that is possible and workable, but to be honest, I'd probably have to talk to whoever that is directly to give you a firm yes or no. I'm about 70% yes, just based on what we've seen so far.
And then I can add that they did say, yes, it is one consolidated statement.
Okay, so if it's just one and you have a couple of subsidiaries that don't produce standalone financials, then it would be a little bit redundant. And in most cases, those are just going to cancel out most of the time, but there still is likely to be some kind of qualitative disclosure that just indicates that that has occurred. So intercompany transactions and leases are still to be disclosed, but they're not going to affect the balance sheet.
Okay, great. Well, I'm glad we were able to, fit that question in here at the end. And thank you everyone for joining us today. Thank you, Ben, for a wonderful and educational presentation. If you are interested in that free demo or any other kind of information, just some reader information, please let us know in that follow-up survey or reach out to your SWK rep and they can put you in contact with Ben. And we hope everyone has a wonderful rest of their day.